Uh,
Before we begin, I would like to thank
yes,
Dr. Jha for joining us and giving
ma'am,
us
just a
this
minute. You can start.
opportunity
Just a
to
minute, ma'am. We
be a
can.
part of this webinar. Thank you, sir.
Okay, okay. Thank you, ma'am. And a very good morning to one and all present to our here. So I, Dr. Appalan, welcome you all the webinar. Welcome to the webinar, The Opportunities in Fintech Industry, organized under the aegis of IQAC, ARSD College, University of Delhi, and collaboration with Finance and Investment Cell and Department of Economics. It gives me immense pleasure to welcome our distinguished speakers, Professor Raj Kopalan, Associate Professor at ISB and M, Bangalore, and Dr. Chevi Asrani, Assistant Professor at Jandal School of Banking and Finance. Sir, we are really honored to have with us our visionary principal, Dr. Jantosh Kumar Jha. He always support to encourage every time, and it give encourage to all the programs such as we are conducting such a programs like webinars, workshop, whatever the speaker sessions. So really, I welcome him under whose guidance the college and department has exponential growth in the recent years. We welcome to you, our distinguished principal, sir. Say a few words to us. Thank you, sir. Wow to you, principal, sir.
Thank you, Dr. Apala.
Yes.
Good morning to all present in this webinar. Esteemed speakers, Professor Raj Kopalan, Associate Professor at ISB and M, Bengaluru, and Dr. Chevi Asrani, Assistant Professor at Jindal School of Banking and Finance, Dr. Apala Naidu, convener of this program, Dr. Richa Suri, coordinator of Department of Economics, other colleagues, and my dear student. On behalf of the college and IQAC team, I welcome both the esteemed speakers in this webinar, and I am grateful to them that they have given their valuable time for delivering a very interesting lecture on the topic opportunity in fintech industry. In fact, financial technology or fintech industry for short is one of the most exciting and fastest growing areas in global business today, and I hope that whatever they are going to deliver here, it would be very beneficial for the students and teachers also, because one should know about how financial technology or fintech is growing in this time of pandemic. So once again, I welcome you all, and I welcome both the speakers, and I think that economics department, the seminar association and finance and investment cell of the college is doing a fantastic job in this regard, and they are organizing so many webinars, conferences, and workshops, and it provides opportunities to the students to learn beyond the classroom teaching. So once again, my best wishes to organizers. Thank you so much. Thank you.
Once again, a warm and cherished morning to our most valued panelists, Dr. Raj Gopal, Dr. Chavi, and Professor Raj Kopalan, principals, conveners, organizing committee, qualified professors, and everyone to this informative webinar on opportunity in the fintech industry. Previous webinars have been packed with information and fun in equal measure, with our most amazing speakers sharing their researches with us, and we expect nothing less today. The platform is all but ready to host keynote speeches, and we cannot wait to lose ourselves in the respiratory of knowledge. It's my great honor and pleasure to introduce Professor Raj Kopalan. Professor Raj Kopalan has had a distinguished career in corporate affair management with a work experience of over 17 years across global markets, including the US, Europe, Japan, Africa, and India, in areas ranging from consulting and marketing to product management and strategy formulation in top-notch firms. Oracle, Wiprotech, Citicorp, just to name a few. He obtained his Master's of Management Studies from BITS Pilani, and in addition to being a CFA with IBM Business Analytics certification, It's impossible to mention every one of which his accomplishment and exciting operation he has undertaken. Because trust me when I say this, they are a lot. But this introduction would be incomplete without referring to his academia career. He's currently an associate professor at ISBM and IIM Bangalore. He has been teaching at top tier business schools in India for over 11 years now. Those students lucky enough to take classes from Raj Kopalan have always been amazed by his strategic planning and his ability to bring out the design thinker in each one of them. Thank you so much for coming and bestowing us with your presence, sir.
Thank you.
Sir, just a minute, sir. Before start the Professor Raj Kopalan, sir, just express my sincere thanks to our convener webinar committee. I forget that. So I didn't forget. Thank you very much, ma'am, for your supporting because of due to some urgent work. So maybe some other committee meetings. So that's why she can't join. But I really express my sincere thanks to our committee member, webinar committee. He always support to us. Thank you very much, ma'am. Please over to you, sir, Professor Raj Kopalan, sir. Thank you.
Very good morning to all of you. Thank you for inviting me and thank you for those kind words. And I hope you will find this session to be useful, right? To give you a broad overview of what we are planning to do today, myself and my colleague, Professor Dr. Shavi Ashrani, we were discussing, how to make it, valuable for you. So the initial part of the webinar will be a presentation from my side in terms of the fintech industry, right? Especially with respect to India, right? It's a coincidence that I've been doing a consulting in the area of fintech, and I have some recent data, so I could share with you and give you insights in terms of fintech industry in India. Post that presentation, Dr. Shavi will share her insights on the dynamics of the industry, as well as the opportunities which are available. And then, both of us as a panel, right, we will take question and answers from you, right, as far as possible, right, as the time permits. So let me straight away, I thank you for the principle, and his words are true, that one must have a very good understanding of the industry before you understand, what the opportunities exist in the industry. So let me share my screen and I'll walk you through a brief presentation which I put together, right? And then, we will have the Q&A. Please, note down your questions, right? We will have the Q&A at the end of the session, right? Let me share my screen. I hope my screen is visible.
Yes, sir. Perfect.
Yeah. So this is the agenda for us today, the fintech industry in India, opportunities in fintech, and then we will open the session for a question and answers. So in terms of fintech industry in India, I plan to cover, the various topics which are, how the fintech industry is being looked at today, right? What are the various, sub-segments under fintech, right? What are the key drivers and, enablers, right, which are enabling the hectic growth and the pace of the industry in India today? Then I will cover a little bit on the current scenario, as well as what is future in terms of the shift and the trends which are happening. So let me go. This is an acknowledgement because, to make each of the chart, I had to go to multiple data sources, right? RBI, Statista is a very good website. IRDA, respective industry associations. NPCI is a very good, source for you, National Payments Corporation, and then, many of the angel and the venture capital sites. So I do acknowledge the brand names, copyrights, and logos of the respective owners. When you look at fintech in India today, right, you can look at fintech in terms of, couple of things, right? Four broad, categories. One is called payments. Second is lending tech. third is insurance tech, and fourth is investment tech. Right. What I have done is to give you a highlight in terms of how these sectors are growing. I kind of collected data in terms of what has been the investments which have come into each of these subsegments in the past about 4 to 5 years, and the number of deals, the VC deals and the startups making funding deals in each of these subsegments. So when you look at the payments segment, the players are categorized into digital wallets, right? Payment aggregators and payment gateways, right? For example, payment gateway, Razorpay is a payment gateway, whereas digital wallets will be your GPay, Paytm, etc. Right? And then there are some intelligent aggregators like Cred, right? Who does a lot of things in terms of intelligent platform for credit cards, right? So especially with respect to the payments. The second thing is in terms of lending tech, where a lot of innovative lending products are coming. Every day there has been a couple of new innovations. Like for example, buy now, pay later. This BNPL is a buzzword. A lot of buzzwords are floating around in this particular industry, right? BNPL is buy now, pay later, which is when you make a purchase in the e-commerce site, you can convert it into an EMI, right? So there is a lot of things which is happening in the background. And then, there are other things like peer-to-peer, which is P2P kind of, lending. All this will fall under, your lending tech. The third broad, subsegment under fintech is your insurance tech, right? Where there are pure play digital only insurance companies, there are web aggregators, and then there are tech-enabled, insurance products. The fourth subsegment is your investment tech, where you already know, some of you may be investing in online brokerages, but then the recent phenomena which has started is robo-advisory. We will get to each of these subsegments, but then to give you an idea, right, the payments, there has been the most, kind of, investments has happened in the payment side, right, close to about US $4.6 billion. But then the number of deals is, say, about 133, lower than the lending tech. That means that, right, to establish a payments, technology company as a startup, you need, much more capital, right? So each deal, average deal size will be far bigger. Just to give you, so investment tech, for example, is just picking up in terms of, robo advisory. Lending tech is picking up quite a bit. And insurance tech is also picking up. To give you a broad idea, this is the 4 major subsegments, we as consultants look at when you look at fintech. The fifth one, which is outside of startup kind of a scenario, the pure play, this thing is called neo banking, right? These are, challenger banks, also called challenger banks. They challenge the traditional brick and mortar banks because they operate only online. They don't have physical banking offices, but currently they provide very basic banking services. And then there are digital banks, right? Digital banks are nothing but the traditional banks, right? Having seen the competition which is coming from the startups, especially the lending tech companies, they have started, they have started digitizing parts of their businesses, right? That digital part of the traditional banks are called digital banks. You would have heard about Yono from SBI or Kotak 811 from Kotak Mahindra Bank. To sum and substance of what we discussed is the fintech opportunities are being approached by 3 kinds of players, right? One is your startups, right? Like your Paytm. Another is technology players who are getting into the fintech play, like your GPay. Google was essentially a technology company, but then they are getting into the they have got into the payment systems in a very big way, the payment technology, right? And then you've got traditional BFSI players who are now getting into the fintech opportunities. So it is a very, very interesting, kind of highly fluid but charged up kind of an ecosystem today, where 3 broad categories of players are approaching these opportunities in different manner. Now, what are the key drivers which is driving fintech adoption in India, right? For any market, you have a demand side as well as a supply side. As we all know, smartphone penetration definitely is, right? Very, very favorable demographics, because, using digital itself requires a mindset, right? The millennials, post 2000 born, millennials and, youngsters like you take to the digital like fish to water, right? So it's a favorable demographics, right? Average age is about 27 or 28 in India, right? And there is huge opportunity in terms of underbanked or unbanked, population that can be reached by fintech. These are the main, demand side drivers. From the supply side drivers, you got, a major boost has happened in terms of innovation, right? With a lot of government policy support, right? We will look at some specifics into that, right? More than 2000 startups have come into the space in the last about 7 to 8 years, right? There is supporting regulations on innovative approaches like Sandbox, right? We will look at it. A robust, tech stack, right? Technology stack, which is enabled and facilitated by government. And then, the fall in the access, right? The data access, rates, so that even the middle of the pyramid and bottom of the pyramid are able to have, pay for the, data, right? We are becoming data poor to data rich, which is a shift which is happening. What is peculiar about India, when you look at the fintech year-on-year adoption rate between, say, 18 and 19, India is now growing at about 87% in number of people, right, who are signing on to these kind of companies, whereas the world average is 64%. The peculiarity about India is when you look at, for example, US, an advanced economy, they went into the laptops and computers first, and then they moved into the mobile telephony and next. But in India, it's the other way around, right? A lot of people have mobile phones in rural, semi-rural, urban, semi-urban areas, whereas they may not have a laptop or a PC. So we straight away jumped into kind of a smartphone adoption, and that is why if we kind of leapfrogged the technology as compared to the Western countries. So the sandbox approach, as I said, one of the supply side drivers is supporting regulations on innovative approach like sandbox, right? So RBI, the central government and RBI, they approached, they created a sandbox, right? Sandbox is an environment which is a carefully controlled environment where companies can participate and test their fintech offerings in a carefully controlled regulatory environment, because all these startups or like they prototype, they launch the service, they configure some digital products, and then they learn by doing, right? So to do that, certain regulatory relaxations, right, for the limited purpose of testing has been allowed, right? And then they allow to conduct field tests to collect evidence of benefits and risks for the final end user, like you and me, right? While carefully monitoring and controlling risk. So essentially, the underlying theme is to learn by do, and all the three players in the ecosystem. One is the regulator, right? RBI and the government of India. They get first-hand empirical evidence on benefits and risks, right? The incumbents, which are the existing traditional banks, they understand the how fintech works, and help them to create the digital part of their businesses and integrate them into their overall plan. And they also encourage the startups to understand the other side of the coin, which is the regulations and the financial legal compliance and risk aspects, and then shape their products accordingly, right? So all the three major players in the ecosystem benefit by the sandbox kind of an approach. While they put together, all the three players come together and configure and put together some prototypes and testing these kind of offerings, right? They also get real-time feedback from enrolled customers, right, which can educate the regulators as well as innovators who are the incumbent banks or the fintech companies on the costs and benefits. Now, what is the progress? This is the current data, right, on the sandbox approach. Essentially, they collect firms as a cohort. Cohort is a group of firms who are interested in a specific space. For example, in early 2013-14, a set of players came together and they were interested in the payment space, right? They do a preliminary screening of the players, right? And then, they do the test design. then application assessment, and then, testing and evaluation. This is a 5-stage process where, RBI, takes in a cohort and put them through these 5-stage process, right? The first cohort was on, retail payments, right? Successfully exited by 6 entities, right? And the second cohort was on remittances. The third cohort is, actually happening, which is MSME lending, right? Micro, small, medium enterprises lending, right? And the fourth cohort is being proposed on prevention and mitigation of financial fraud. So to sum and substance of that is, the government of India as well as RBI has played a very key catalyst role in terms of, doing a controlled, innovation, where they create the ecosystem, kind of a real-time, real-world lab, where, both the startups as well as, established players can, test, learn, and then, launch their innovations. The first thing is, apart from the segments, how fintech can help in traditional banking, right? As students of economics and finance, net non-performing assets are a major problem with banks. And the return on asset, ROA, is mainly dependent on your net interest margin, which is your spread between average, lending rate and average deposit rates, the operating expenses, and the non-performing assets, right? ROA is a key metric for success, key performance indicator for any successful bank, right? So the fintech, right, can help in terms of automation of decision making, loan decision making, which leads to better decisions. Because, the things like, at the high end, you have got corporate loans, right, where the transaction value, loan ticket size is very high. At the very low end, or your personal loans, where there are millions of loans, but then each loan ticket size is very, very low. So especially, technology like, your machine learning and analytics can be applied to make, better credit decisions, right? Based on simulations, in terms of generating what if scenarios. So better decisions can be made using fintech in terms of loans. The second level is, how do I minimize NPAs? Like, your analytics, dashboards, and, on proactive, lead indicators of KPIs. For example, a sector is not doing well. For example, I have lent to hospitality sector or a tourism sector as a bank, right? Now how do I, before even the loans go bad, can I get some early warning signals about a sector and the client of a particular sector who has taken loan from me, and can I restructure the loan, right? So can I minimize my, non-performing assets, right? So fintech can help in terms of your early warning signals. The third is in terms of, having a loan having become a bad loan, to an extent, right? How do I maximize recovery, right? Based on recovery solutions, based on technology. So to sum and substances, fintech is not always only about, pure play startups. It is also about application of, cutting edge technology like, artificial intelligence, machine learning, and your, analytics. On the back end, infrastructure investments like your cloud, etc., for, these types of, traditional banking activities as well, right? So it can do better decisions, it can minimize non-performing assets, and it can maximize recovery, thereby, making a bank healthy and in turn the economy healthier. Now, let us get into those 4 subsegments which we are talking about, right? Which is called, traditionally the fintech, right? One is the payments tech, right? If you look at it in terms of market share, GPay is the main player, right? What enabled payment, it's amazing, right? You go to and pay even a 10 rupees for a vegetable vendor, we can take out our mobile and, just do a QR code scan, right, today, right? That is magic of India, which is a combination of 3 things, 3 enablers coming together at the right time, right? The UPI stack, which we'll talk about, unified payment interface, technology stack. The second is the Aadhaar, right, for verification, right? And then, a bank accounts to all, right? So you need an account, right, to do the transaction at the end of the day. So the government policies to enable everybody to open a bank account, right? Government policy to have a unique identification, right? UIDAI based Aadhaar, right? And then, development of a unified payment interface stack. All these put together, right, created, what is called the magic of India in the payment space. You won't believe, there have been deep debates which is happening in US, right? They are saying that let's not reinvent the wheel, let us just copy what India has done, right? And they were seriously debating about launching a equivalent of payment UPI in US called FedNow, right? So we are quite advanced in this particular space. Now, if you look at the payments tech, right, there are 5 categories here, right? One is the UPI based payments, right, which you and me are using, phone pay, Paytm, GPay, right? And then you got prepaid wallets, right, where you can, digital wallets, right? And then you have the traditional credit and debit cards, right? And then you have NEFT, which is the fund transfer, and then your real-time gross settlement, RTGS. So one interesting thing which I put together where we can get some insights is, if you look at the CAGR, right, obviously the UPI is growing at 270%, between these 2 years, right, as compared to say 24% almost each of prepaid wallets and credit and debit cards, and then NEFT and RTGS. The key thing to look at is the average transaction value, which is flowing through these platforms, right? The RTGS very clearly is a high-end, payment, kind of a thing where you need to do bulk payments. For example, it can be, intercorporate, funds transfers, right? Huge money payouts, right? Payment exchanges. NEFT is at a fairly, larger value, even for an individual or maybe small to medium enterprises, businesses, right? Typically, number of players will come into, personal level, individual level will be credit, debit cards, prepaid wallets, and UPI. Right now, UPI today is posing a lot of challenge, and may look at kind of with more and more features and innovation happening by the payment players, right? They may replace some of the credit and debit cards as well as prepaid wallets over a period of time, because if you look at the average transaction value, all these 3 are playing at the very, very similar level, right? But then this is growing extremely fast because of the smartphone and cheap data access. Development of India's stack for UPI was the game changer, right? The primary purpose is to provide interoperability across various payment gateways, right, which are banks and wallets, enable all Indian bank account holders, right, without the need to enter bank account information or net banking, right? When you are using a gateway UPI, right, you are not accessing your bank account directly, right? Provide a virtual payment address. We will look at this, and then the entire stack, the technology, the UPI stack, is owned and managed by National Payments Corporation of India. This is a very simplified diagram I tried to put together. I try to make it non-technical as much as possible. So you have a sender, and there is an information flow, and there is a funds flow. For example, you have to send the money to the receiver, and he has a bank account, you've got a bank account, right? The main enabler here is creation of what is called VPA, which is a virtual payment address, right? Which will mask the customer's bank account information, right? A sender need not have the receiver's bank account details, right? The only thing he requires is, right, the receiver's mobile or a QR code which is linked to the VPA, virtual payment address of the receiver, right? The NPCI, the National Payment Corporation of India, does the authentication and verification using UIDAI and Aadhaar, right? As well as the UPI uses the existing payment gateways. It doesn't, there is no new payment gateway. They use the existing, infrastructure, right? So essentially, so if you know the receiver's mobile, right? So you can transfer funds, and only the information flow happens. Information flow and the funds flow are completely separated, right? That is the beauty of this particular solution. right? The sender does not access his or bank account directly. It is accessed through a API, application programming interface, right? On the verification is done by NPCI, right? So I've tried to put together a very simplified diagram, right? The sender will get only a notification of a debit, right? Whereas the receiver will get a notification of the credit, which is the information flow, right? And from the individual bank, the sender will get, for example, as part of this routine, SMS alert, the credit as well as the debit, right? So this is how, this is a schematic or a simplified diagram of how the UPI stack works. So it allows for interoperability. That is very, very, important. For example, I may have different digital wallets. The receiver may have a different digital wallet, right? He may have Paytm, I may have GPay. He may have accounts in different banks. I may have accounts in different banks. But then, you got, only one VPA per, customer, which is linked to his or bank account and to his, mobile number, right? So if you know the mobile number, you can execute these payment transactions. Now, the question to ponder here is, why payment tech led the way to other, fintech sector expansion? The reason is that, for example, there is a very small business owner, right? He's a trader, for example. He has to borrow money at an exorbitant rate today, right? Now, because he or she does not have a credit history, right? But if he starts doing his business using, payments gateway, all these are digitized, and his, turnover or the transactions in terms of receipts as well as payments, receipts from the customers and payments to the vendors. For example, he's a trader, everything is digitized and the records are available. So, a company which is going to lend to this particular digital lender will look at that data set in terms of his transaction and his behavioral data, right? Whether he is paying, his, dues on time, what his regular cash flows, inflow and outflow, right? His turnover, etc. And based on that, they are able to lend. So the payment tech, that's how, kind of, facilitates the data from payment tech is facilitating, for example, the lending business, which is the digital lending. So when you go to lending tech, the second subsegment, right, this is a business model where, loans are applied, dispersed and managed through digital channels. Again, to give you a quick view, there are 5 types of digital lending players. One is B2B, right? They focus today largely on SME lending, small and medium enterprise lending, and startups who are yet to make profit, right? These fellows, they find it extremely difficult to go to the bank and, avail credit because, the bank's way of doing, lending is based on your traditional method of, credit history and, and then, credit scores, etc., etc. Whereas, the new digital lending startups, they look at, based on cash flows, all right, or based on revenue, right? The lending models, or they build models, right, using analytics, right, and then they have machine learning, right, in terms of looking into the patterns of data, and they essentially look at non-traditional data sets, right? The tradition, for example, if I have a credit card and I've been paying my credit card at the right time, or I'm servicing my home loan at the right time, my credit score will be very high, right? But then that is a traditional data set, right? But these fellows are looking at highly non-traditional, kind of data sets. For example, in B2C, to give you a personal loan, right? They look at the data sets of, for example, how, regularly are you paying your utility bills, right? Your electricity bill, your mobile bill, and the telephone bill, all those things, right? The water bill, etc. So based on your behavior, right? Based on non-traditional data sets, they are building, models, and using those models, they are arriving at the lending decisions, right? There is P2P. B2B is small to small businesses. B2C is, to people like us in terms of retail, personal loans, right? P2P is, peer-to-peer lending. There are people who have excess money. There are people who have, these platforms operate as intermediary, right? A market, right? They match the lender and the borrower, right? The aggregators, or a type of players, who provide information and give comparison information. An example can be your policy bazaar, for example. In that, you can go and compare various, insurance policies, right? And then they also provide solutions like once you apply for a specific insurance through Policy Bazaar, they also take care of your, for example, the documentation, the initial process of acquiring the customer and then hand it over to the insurance company. Same way for a loan, they do the loan sourcing and origination, right? And then finally, you have a set of players called software providers, right? Who provide software, who are essentially, this is based on your cloud, which is software as a service. And then they also build sophisticated algorithms, right, for credit rating models and assessment methods to support all the other players, right? So these are the type of 5 players who play in the digital lending space. So what is the advantage of digital lending? Feasible to lend small amounts for ultra short tenures, right? I can lend 1,500 rupees for a day trader, right? And then recover the money by the end of the day after he has done his business through the day, right? That is possible now through technology, whereas banks cannot do it, right? Ultra short tenures, micro amounts. For example, if you take travel insurance, right? Products, for example, right? This is only for the duration of the travel, right? Or if you are going in Ola, for example, right? You are kind of insured only for that, about half an hour or 45 minutes of commute, right? So these are ultra short tenures, and then the amounts are micro amounts, right? That's how technology can enable this feasibility, right? They have higher risk appetite because they use non-traditional metrics to reassess repayment capability, right? They are extremely fast, right? Because everything is digitized, there is electronic KYC and disbursements in minutes. They do real-time underwriting, the risks, right? Based on multiple traditional and non-traditional data sets. And then they use alternate credit models. So digital lending is helping, kind of, towards financial inclusion by making credit available to tier 3, tier 4 towns, lower income segments, MSMEs, and self-help groups. There are problems in digital lending. I will not get into many of this, but we all know that there have been a lot of frauds lately, right? There is a lot of non-authentic digital lenders who just create an app, right? About 600 out of 1,000 have been found to be illegal. And then the Digital Lenders Association, they are calling, they are talking with RBI to set up a nodal agency to kind of accredit or verify, validate, and monitor the digital lending applications. Now, the one player which is just going very fast is peer-to-peer lending, right? Just as a sample, you need to, why these, platforms are working, right? Unless until there is a benefit to all the players, a win-win-win situation, right? It cannot sustain, a business model cannot sustain. So for example, in a P2P, the lenders have certain benefits, right? They get higher returns, right? They can control the spreads by, lending across borrowers, right? And then, for a platform, right, they charge some commissions, and then, based on, risk profiling, they do scoring, right? And then, it's kind of a matching they do between lenders and borrowers for the P2P platforms, right? And the borrowers, right, it's a very short repayment time, no prepayment penalty mostly, right? It's a very fast turnaround time. I need money very quickly for an emergency. I can go to a P2P platform. It's a bite-sized loan products. I can have very small loan amounts. For example, banks may not be able to lend below a certain minimum value, right? Less rigorous documentation. That is another problem, these people face when they go to the bank, right? Paperless process, right? And access to large number of lenders and varying degree of needs, risk returns, right? So you and me, for example, if you got excess money and we are willing to take, say, a medium risk, and then we are looking at a medium return or a high risk and a high return, we can go and lend our money in a P2P kind of a platform, right? But the government has come in and put in, for example, an individual investor can invest up to only 20%. For example, there is a borrower, individual borrower. As an individual, lender, I can only lend up to 20% of that particular individual borrower's, total requirement, right? So that if I have 100 rupees, I need to, the platform will automatically amortize that 100 rupees into 5 into 20 and, kind of lend it across to 5 different, borrowers. So that, for a lender, which is a common public like you and me, our risk is spread across, 4 borrowers, right? So these are the, checks and balances which, RBI is putting into place, right? P2P will fall under, NBFC, right? They come under the purview of Reserve Bank of India. The third, platform is InsurTech, right? There are 110 InsurTech companies in India today. There is an India InsurTech Association. 2 have become, unicorns, right? The valuation has become $1 billion now, right? Digit Untitled, right? They are attracting lately a lot of funding because, India is highly underinsured, right? So our premium to GDP ratio, right, highly, underpenetrated, right? And India has to catch up a lot in terms of, covering, the population in terms of insurance. There are only digital-only insurance firms like Digit, or even, for example, there are web aggregators, Policy Bazaar, for example. Traditional players are going digital, right? Like your ICICI Pru, HDFC Ergo, etc. They are digitizing lots of, parts of their businesses, right? And then there are very, very innovative tech-enabled, insurance products, right? Why, insurance is working, InsurTech is working, because, it's based on usage, right? Insurance can be based on usage, right? And it can be customized to reward, behavior. For example, if there is a car insurance, right? Using IoT sensors, right? And, for example, analytics, they can monitor the driving behavior, of the particular driver, right? If he's a safe driver, he doesn't accelerate, decelerate, braking suddenly. His driving behavior is monitored, data is collected, analyzed. And if he is a very good, steady driver in terms of driving behavior, right? I need to incentivize by, offering a lower premium amount, right? Or for example, health insurance, right? A retailer, for example, is tied up with an insurance company, and, they are taking, data in terms of, shopping data, right? So a shopper's behavior in terms of buying, for example, tobacco-based products, alcohol-based products, right? Unhealthy food items, all these data is shared with the insurance company, right? There's a pilot which is happening, right? And if based on and this individual approaches the insurance company has the data in terms of, what kind of, lifestyle, the food, etc., which, they can track the entire lifestyle. For example, you have the wearables today, right? Even Apollo is saying that if you have a wearable and if you allow us to collect data about your, exercise regimen, right, you will get, discounts on your premium, right? So these are all tech enabled, right? Now you can see how a retailer is not only selling his, retailing, he's also selling data, right? So to the insurance companies, right? So what is happening is it awards, good behavior, incentivize good behavior. The customization of the products is very, very high, right? The level of customization I can do. A traditional insurance, they may have 4 or 5 products. You take it or leave it, even if the product doesn't, kind of closely map to your requirements, right? Now, so bite-sized insurance products, right? For a specific time, for, for a specific amount, right? I can do, right? And accurate, timely, and great experience in claims processing. This is one of the area which, the insurance, InsurTech companies are focusing on today. Right. I will not get into this. Let me move into the final aspect of payment, the fintech, which is investment tech, which is online, investment platforms, dime a dozen today, right? You have robo advisory. Robo advisory is essentially, algorithms which will come in place of human being or wealth advisors to advise the clients, right? In terms of, give suggestions in terms of, what kind of, portfolio a client can build based on the risk return appetite of a particular investor, as well as his, profile, right? And his future requirement. And then online trading and e-brokerages. These are the 3 players in the investment tech space. So robo-advisory is growing very, very fast. Some of the players who are using it, 5paisa.com, Funds India, right? This is what I discussed now. They are based on, artificial intelligence and machine learning, right? The asset under management, right, of these, companies are increasing, right, and expected to reach 50 billion by financial year 25, right? US are the number of users of robo-advisory is also growing, right? One interesting aspect is, 2 out of 3 in the age group of 18 to 34, they use robo-advisory, right? So the younger demographics prefer, they have an open mind towards, technology adoption. Now, what is the current shift which is happening in the fintech space? It is blockchain, right? To shortly put, blockchain is a distributed ledger, right? A digital ledger, right? I'm not getting into the technology. It helps in, KYC. It helps in loan dispersal, right? It helps in remittances, payments, trade, letters of credit, etc., trade and invoice financing, right? All these are leading to a concept called, decentralized finance, right? This is one current shift which is happening where, they are trying to, there is no intermediary, right? And a combination of cryptocurrency, a combination of blockchain is, moving things towards what is called, decentralized, finance. Now, the next big shift which is expected in fintech is banking as a service, where there is a particular brand, so you embed the financial services into the brand itself, right? So essentially, if you look at it, this is the stack, right? You have a brand, you have a user interface. Different fintech players play at, different levels using technology, or, there are end-to-end providers of the stack also, right? The problem the fintech startups are running into is in terms of regulatory issues, in terms of infrastructure issues, and in terms of, scaling issues. So more recently, the fintech companies have started, kind of collaborating with, traditional banks, right? Because, to move from, smaller level, to more, banking services, more products, etc., they need to have, for example, licenses, right? Banking license, right? They can't do, deposit taking. Many of the fintech players, right? They can't take deposits, right? So banks always have the advantage, even as of today, in terms of very low cost of funds, right? Because, the FDs are the cheapest, source of funds for lending. So what is happening is, a kind of, there is the situation in fintech industry is very fluid today, right? If you really look at it. So different players are occupying, different spaces. There will be a consolidation which will happen, or a shakeout which will happen, right? There will be a lot of, collaborations between startups and traditional, BFSI companies, right? Enabled by technology, right? So the way things are moving, it is moving into a concept of embedded finance, where, each of these layers, each fintech player, there will be niche players in each of these levels, or there can be an end-to-end player. A large bank can invest to build a complete, banking as a service infrastructure, right? For example, I've given Goldman Sachs, right, in their Bangalore center, they are collaborating with, Apple Card to build a complete end-to-end, banking as a service infrastructure to launch, what they call as a embedded finance or a next generation banking. Now, this is a separate topic in itself. We can get into it when time permits. So I will kind of, wrap up my discussion today, right? What is fintech? Different things to different people, right? It is a cutting edge technology applied, a creative destruction of financial services, as we know, right? There are data privacy issues and cybersecurity issues. Fintech is lifting a lot of people out of poverty. A lot of case studies have come out, like Pesa in Kenya, for example, right? How, it is, lifting people out of poverty. It is reducing crimes because no longer you carry physical, money, right? It's revolutionized lending, right? A lot of things which is previously not considered under traditional BFSI, right? Your banking, finance, and financial services and insurance is now, is part of fintech, right? Your crowdsourcing, charity donations, your crypto, peer-to-peer, personal finance, right? Anything involving flow of finance, right, is now coming under fintech. Fintech companies, as of today, they are specializing in unbundling of banking services and products and focusing on, specific, point solutions, right? He's a pure play payment player. He's a pure play, insurance player. He's an investment tech player. But then because of their focus, because of their very, very low overheads, right? It's virtual, right? They are able to, be extremely, efficient, cost-effective, focused, and user-friendly, right? Very, very streamlined, cost-effective operations. The largest producer of fintech in terms of, the technology, the innovation is happening in US. The largest consumer is China, next is India, and third is, South Africa, right? In that particular order, right? So traditional banks are worried, right? That is the bottom line, right? They are really worried, and the boardroom talks are, how they are going to, look at it, whether as an opportunity or as a threat, right? Whether they need to go their own way of, digitizing, right? Or they should look at a hybrid model, or they should partner with a fintech company. There is a lot of board level, discussions which are happening today in traditional banks. Add to that, RBI just, included, I think in last August, I think August or September, right? Startups should also be part of priority lending. That means that banks have to lend necessarily, some amount to some percentage of their loan portfolio to startups also. And many of the startups in India are in the fintech space, right? It's a very funny situation, right? We take money from the bank and then we compete against the bank, right? So this is what it is. I will wrap up here. Areas to equip yourself with as students, right? Then, Dr. Shavi will talk about the opportunities. You need to have deep sectoral knowledge, right? As students, to spot customer pains and gains, develop problem statements and use cases, and ability to convert business rules in payments, lending, insurance, and investment, areas. Enable, you need to have a digital native mindset, right? To comfortably adopt, understand, and apply digital in business, especially in BFSI. You need to have a deep appreciation of, digital technology, right? You act as a bridge between end user, who are your consumers of your application, and then on the other hand, there are technology fellows, right, who code and write, technology. You need to be the kind of person who will take the user requirements and convert it into functional requirements to launch, business ventures, pilots, prototypes, right? It requires, functional knowledge, right? Which is from the traditional BBA, MBA, undergraduate programs like your marketing, especially marketing, digital marketing and marketing analytics, HR, right? As an analyst, you are, so these are some of the, areas which you need to, equip yourself with if you're looking for a career in fintech. So I will wish you all the very best for success in your current and future endeavors in year 2022. Right. Let me hand over this, kind of this thing to Dr. Shavi, and then she can take it over from here.
Yeah. Yeah, thank you very much, sir. It's a very interesting and enlightening session, sir. We are enjoyed a lot, I think, all the participants. Before start with Chavi, ma'am, just you can give us some introduction. Yeah. Proceed.
And to those who are not familiar with the discipline, fintech can be a riddle inside an enigma filled with buzzwords and awash with seeming complexities. This enriching session has got us all excited to dive deeper into the subject. Thanks to Professor Raj Kopalan for this informative session. Now, I would like to invite my co-host, Isha Seth, to introduce our other phenomenal panelist. Take it away, Isha.
Thank you so much. We are gratified to have Dr. Chavi Ansari among us. Dr. Chavi is Assistant Professor at Jindal School of Banking and Finance. She holds an undergraduate degree in Economics from Hansraj College, University of Delhi, Masters in Economics with a gold medal from Loyola College, Chennai, and a PhD degree from IIT Delhi. Exemplifying an exceptional journey, Dr. Chavi has worked at Indian Council for Research and International Economic Relations, Institute for Economic Growth, EY, Ford School of Management, University of Delhi, Bennett University, University of London, and Symbiosis School of Economics. Her doctoral work on digital communications was recognized as the best doctoral work on the 12th Indian Subcontinent Decision Sciences Institute conference, and her essay on policy and regulatory challenges on digital markets was identified as the best writing by Competition Commission of India. Ma'am, we are eagerly looking forward to understanding the intricacies of the fintech world and expanding our horizons about the dynamic opportunities in this domain. I'd like to invite you to enlighten us all about the same.
Thank you very much, Isha, for very warm and kind words. Before I begin, I would like to thank Professor Raj Kopalan for setting the context so nicely and walking all of us through the intricacies of the fintech industry. And it was indeed a very comprehensive and insightful presentation that we just saw. Being mindful of the time, we would be having a Q&A where you could have questions across Raj Kopalan. I would just like to keep it short and concise. And I do see many of you are economics graduates. So I would like to begin with a question to you. Most of you must have studied this subject, macroeconomics. And very often when we start macroeconomics, we often learn about money, how money came into existence, how money came into being. And we discuss right from barter, we think about the gold standard, and then currencies being backed. And today, when we are living in this digital era or in the ICT revolution, the way we think about money, that has evolved many folds. So I hope most of you would agree to that. So my question to you and some of the budding economists is that how do you think fintech is going to impact the velocity of money? And what changes would it have on circular flow of income? And how would these changes on velocity of money and circular flow of income would lead to different set of opportunities that you and I as individuals are going to experience in this fintech industry? Yes, Shashank, please go ahead.
Yes, ma'am. I was saying that it will increase the circulation of money in the market, and thus like the stock market and those all things will get benefited from the fintech industry.
Yes, that's absolutely correct. Fintech would increase the velocity of money, as you said, and the money will start changing hands in a faster way. That means all your four sectors of the economy, where we talk about production sector, firms, household, the consumers, and when you're talking about government or the banking or the financial institutions, they become more closely connected. And the money starts circulating faster. So that means one person's income becoming other person's, one person's expenditure being other person's income, that circle kind of goes faster. So this, the coming up of the fintech industry, where you will, so as Professor Srinivasan explained, when money is changing hands in a faster way, that means incomes should be generating in a faster way. But on a contrary, in the digital age, in the last few years, we have seen a slowdown. But when we think about this slowdown, we must be mindful of the fact that whether we are controlling for this kind of innovation. And if we control, we would see that things would have been worse. But this evolution of fintech did actually help us not worsening these kind of situations. So it did help to better hold the economy together. So another thing that, as Professor Srinivasan was explaining you, that technology or fintech in your payments, or as your insurance gateways, or as your loan, or when we think about microfinancing, and what it has done is it has made accessing financial resources easier for individuals, which was not before. So when we talk about the case of M-Pesa in Kenya, which has been one of a very, very worldwide recognized successful application of technology in finance, it was very, very simplified. So these people used they used their regular feature phones, and people in the remote villages were able to access finances. And once you have finances, when you have access to capital, it leads to entrepreneurial ventures, small startups, and the ecosystem around the business starts developing. So that is what this evolutionary technology has done for us. So a lot of traditional jobs, we see that are going to go away, did go away with the coming of technology. However, with the advent of technology and such kind of instruments, what has happened that there are new kind of industries and fields that you could join. Now, if we think about the fintech ecosystem, which you had a very comprehensive presentation before me by Professor Raj Kopalan, and he provided you entire view about the industry. Now, if you look at any industry, or if you talk about any business, the domains where opportunities as young graduates would lie for us, and even for me, if I was to join the industry, would be the very, very typical, still traditional domains. You would have a marketing angle to it. You will have a sales angle to it. You will have an HR angle to it. You will have to take care of, optimization of resources, look at finances, and how I do see many of your economists joining. So optimize resources, managing finances. Some of you are commerce graduates, so accounting and all. So all those lines will still exist. So all those traditional roles will exist. And that is why even in the technology driven world where, information is just at your fingertips, you just, you can just Google anytime. So if you are inquisitive about things, you don't really have to be like a very, a scholar, but you just need to go click, and then you have the information. So the flow of information in this age has become a lot more easier. But what we actually require to get ahead in this industry is, as Professor Srinivasan said, a right attitude and the way to get things and the need to get things go forward. So now when we talk about industry and opportunities that stands for graduates like you, we need to understand that this industry is still very, very agile, and it's still very, very nimble. So if you plan to be a part of fintech industry, you cannot think of working in silo of a traditional marketing, sales, or such domains. So these domains are definitely going to exist, but you must have a skill set to understand different domains of a business aspect simultaneously, and be flexible in terms of how you approach your work environment. But there are going to be needs for all types of domains across these places. It is not necessary that you have to be a technologist to be a part of fintech. So for a technologist to know that what type of platform or what type of interface you develop, you do need a person who understands consumer behavior very, very aptly. You do need somebody to take your platform to the people, to get that platform adopted. Because only if your fintech platform, be it a payment gateway or an insurance gateway, if it is adopted well or marketed well rather, then only your business gets traction. So having a tech platform does not solve everything. Then there is a law and legal angle to it, because at the end of the day, you're dealing with finances. We are talking about a lot of cyber crime and fraud occurring. So we need to manage all these things, and the traditional roles still remain abreast for you. So the right skill set is having the right attitude besides the knowledge. So knowledge, you are gaining in-depth knowledge at your university. But along with that, as times ahead, due to the technology, you would need to be learning a little bit, like having deep knowledge of your own domain, and then surfing and having some kind of interdisciplinary knowledge of the other domains. So just because you're a commerce or an economics graduate, you can't get away with saying that I don't understand technology at all. You don't have to build the platform, you don't have to code, but you do have to understand how the technology is working. So these are the skill sets that you would be needing, and opportunities are more for you, because with the money changing hands in a faster way, not only you can think about getting employed in this industry, which is, you know, getting a job, but because it is easier to access finances, you can even think of, you know, starting your own ventures. Having said that, when we are thinking about microfinancing and you raising money for your ventures, it does become easier. And when we say that it has helped poor or the marginalized community to access resources, so there has been that these platforms have helped in entrepreneurial activity a lot. So that is where the major opportunities lie for you. So even if you want to build a startup, you know, people who are educated like you know, top 2 percentile of the entire Indian population, and if you're getting to learn and understand technology, you can access capital more easily. Not only do you access financial resources and capital more easily, what advantage this technology has also done for you is that fintech has made this economy more of a sharing economy. So for instance, in these days, if you want to drive a car or go for a trip, it's not necessarily that you have to be a car owner and buy a car for, say, 5 lakhs or 10 lakhs or whatever. You can still rent out a car. So, you know, like Zoom car or Uber car, you can rent a chauffeur, you can rent a car. So not only access to capital has become easier, even access to equipment and machinery. So for instance, even, you know, with your workspaces, with your collaborative workspaces, or, you know, renting commuting facilities such as cars, or, you know, renting you know, furniture for your office. So all these assets are also becoming a part of sharing economy, and fintech has a role to play in it. So, and now being mindful of the time, I would want to, you know, have the next 10 minutes being interactive, where I would welcome questions from you for Professor Raj Kopalan and myself.
Thank you so much, ma'am, for such an insightful session. Now we are power-packed with enthusiasm to explore this field. With this, we open the question-answer session, and since we don't get to meet such eminent personalities every now and then, so I request you all to participate and be interactive. You can post your questions in the chat box.
And dear participants and students, if you have questions, please raise your hand. You can interact with Professor Raj Kopalan and Chavima. Yeah.
Okay. In the meanwhile, while the questions are coming in, I would just like to build upon what I said and what Professor Raj Kopalan said. In this current day and age, your data analytics and data science are becoming increasingly important. So stats has been important when, you know, I was graduating about you know, a decade or so back, and it is still more important today, because that kind of data that the technology helps us collate can help you predict human and consumer behavior in a better fashion. And there you need a lot of manpower and human resource that can you know, crunch those numbers, understand that data, and then churn out your marketing or HR plans or financial or accounting plans in you know, in a similar in a very appropriate fashion. And with technology, you can have a larger reach. So, you know, I do see there are about 71 of you in this meeting, but on a platform like Zoom, you could still have a larger number of audience. So probably if we would come to your class, probably we could only have 40 people there. But here we can have a larger number of audience. So the technology would also help you leverage masses. So you have to be very careful of how you process this data. So that is another area of opportunity.
Yeah, there is a question here. Are fantasy sports apps like Dream 11 also included in fintech? Yeah, that's a beautiful question. The problem is, what is the definition of fintech, right? Now, I was a product manager of FlexCube, core banking solution, right? From iFlex. HDFC, in fact, is the first bank to adopt it. That day, those times, I'm talking about 1990s, or even before that, they are also called fintech, right? It's a technology, right, which is automating the core banking, credit, debits, the general ledger, and all that, right? But then what is meant by fintech, quote unquote, today is especially those technologies which are very recent, I would say, which has come up and, being adopted in the last maximum, 8 to 10 years. The technologies like your machine learning, artificial intelligence, business analytics, right? Integrating with machine data through Internet of Things, right? And using cloud architecture, and then delivering products as services, software as a service, right? A combination of all this, applied for delivery of financial services and banking services is fintech today. That is the loose definition today. But in the sport, that is why I called it as embedded finance, right? What is happening is the brand. For example, you're talking about Dream 11 is a brand. For example, I don't know what it is, right? I have not played the game. I don't know what it is, but then I'm making a guess. This is a gaming app, for example, a Dream 11. This is a brand, right? It's a digital brand. How do I embed? Why do we need finance, right? We need finance to facilitate our life, right? Whether it is in business or is it in personal life. Finance is a facilitator, right? Why can't I have that facilitation as a service, right? While, evaluating, acquiring, consuming, acquiring, consuming, and, disposing of that particular brand. Can I embed finance into the brand, right? That is called embedded finance. So to answer your question directly, right? If there is any involvement of technologies which I've talked about, and if there is any involvement of flow of finance or enablement of finance, right? For example, there can be some coins, right? Fungible coins, tokens, which are being traded in that particular app, for example, right? Non-fungible tokens, or, cryptocurrency developed only for that particular game. You win, I'll give you so much currency, right? If that is involved, right, then definitely you can call that as fintech, right? That is what is the interesting piece, so you can call that fintech. That part of it is fintech, right? I hope I answered that question, right? So do not take this, definition very, very strictly today. It is nebulous, right? So that is why people are talking about decentralized finance, cryptocurrencies, embedded finance today, banking as a service, right? So anything, these technologies, anything which helps in flow of funds, flow of finance, is fintech, right? That is where it stands today, right? Okay.
Okay, I do see 5 questions. There is a question by Shashank, Shishir, and Bankim. So I would take 3 questions and then go to questions by Bansha, Rachit, and Shashank again. So regarding regulation of fintech, so when you're talking about payment gateways, when you're talking about certain insurance gateways, a huge part of the fintech is being regulated by the financial institutions in India. But if your question is about regulation of cryptocurrency, which is, something people are thinking whether it should be a part of fintech, of course, there are a lot of problems with cryptocurrency and how, the entire currency was envisaged. So there is a lot of gray area to it, which is beyond regulation. But when we are talking about currency circulation, when you're talking about the digital currency that RBI is contemplating and is thinking that how it can impact the velocity of money, which is the current thing in question at the Indian Central Bank and many. So that is something that we are still at the finding stage. So in terms of regulation, what has really happened with technology is that there is a lot of knee-jerk reactions between the regulators and policymakers. But going forward, there is a lot of fact-finding and research happening to understand that how, what would be the impact. So what all Professor Raj Kopalan discussed in his talk, all those aspects of fintech are regulated. There are frauds there. Even in your brick and mortar world, there is crime and there is way to deal with crime. So there are frauds. One has to be very, very vigilant and digitally literate to, mitigate those risks. So that is about, so regulatory environment in a nutshell is still developing. It is still not in the most robust form that at least individually I would like to see. And coming to when do we see, tier 2 and tier 3 cities adopting to fintech? So yes, digital penetration of technology. So, it's very simple. So actually not that simple. If you were to just look at the number of mobile subscribers in India, you would say, we would feel that, oh, everybody has a mobile. Like in a state like Delhi or NCR, where your college is situated. But
we wind up just because of the meeting.
Okay. So I'll just wrap up.
Just wrap up. Yeah.
So telegraphically, in your rural areas, mobile penetration is only about, say, 60% or 40%. And in your urban areas, it is higher. So when the digital gap is bridged, the data availability, the internet and all, and that is the speed that what it is going to take, the technology to reach the unbanked and the unserved areas. And one can discuss at length to it. And I still see many interesting questions. Somebody that what attitude an economist should have. Even I'm an economist, part of the fintech domain, a stakeholder. I'll be happy to entertain all your queries and questions over an email. So I'm going to leave my email in the chat.
Yeah.
And I'll be happy to interact with you in person, over mail, or when I get an opportunity to interact with you next. So on that note, I thank Dr. Naidu for having me for this webinar.
Yeah, thank you very much, ma'am. Thank you very much. And due to some, urgent meeting in the college, so that's why we wind up early. So thank you very much. Accept my invitation, Professor Raj Kopalan sir and Sabina. And I express sincere thanks to all the audience and this students and other participants in the university. Thank you very much. Due to this time concern, I have to wind up the headly. So thank you very much, sir. Thank you very much, Professor Raj Kopalan sir and Professor Sabi ma'am. Thank you, one and all, particularly in the technical team and our team members of the FIC and all the students in the team. So thank you very much, one and all. Thank you, one and all. Thank you.
Yeah. Thank you so much. Yeah.